What's up, everybody? Good morning. My birthday's next week. Well, next Sunday. Feeling a little bit better, yeah. Yeah, I got a haircut. Thanks, Lugs. Yeah, I'm feeling a little bit better. The fever, I think the fever finally, like, broke. What a shitty cold, though. It, like, went away and came back twice. Fever broke so far. Yeah, that's true. Happy SLD week to you, too, old school Steve. So, in the interest of trying to make these kind of shorter, I think we'll just like run through everything real quick. And then we'll see if the nerds want to hop on. The heart button is back. Shit. Gherkin Jen, Trash Dan, Jason B, and Sir David, and all the internet friends. What's up, Buckled Up Jen? Everyone say hi to Buckled Up Jen. It has been a while. How you doing? I was on Wall Street Bets earlier and I accidentally ran into Dork in the comments section. How influential is the Moody's downgrade? Well, let's see. They're the last rating agency holding out a AAA rating for the US, which means that they should probably downgrade us, but they're really trying to warn Yellen to stop issuing fucking debt that we can't afford to pay the interest on, and for Congress to get their shit together and dodge a shutdown, which is interesting because this isn't the same kind of shutdown as the one that threatened us prior, right? This isn't a debt ceiling issue. This is an appropriations issue, right? And so it's interesting that Moody's is like putting the same onus on the outcome of this shutdown. I mean, our government's obviously dysfunctional and run by idiots, but yeah, I mean, it's a big deal if they actually downgrade us. It could trigger some fear. It could drive credit spreads. So there's definitely something to it. But the immediate impacts, I don't know how much it'll be. Running a nonprofit is no joke. It's difficult. Wait, if they downgrade the US, doesn't that make the US AAA again because we're at the top? No, it makes us AA. It just means that the top rating becomes AA. We'll still be number one. I mean, we'll always be number one, but it's It's still not good. And if you think people in the bond market are demanding more yield now, wait until U.S. bonds are unanimously downgraded to like AA plus, right? Have you noticed the 1.22 million GME shares Rentec owns? I don't know since when they own those. Ooh, interesting. No, but Rentec generally only buys GME before it's gonna run big. So let's take a look real quick. It's not a lot compared to what they used to buy. If you before they bought like 600,000, and that was before the split, so maybe they're a little less confident in it. But Rentec likes to play the cycles, and it's been a while since we've had one, so let me take a look and see if we can find out when the filing is. Nope, that's the wrong fucking company. There we go. Let's see. Wolverine Trading picked up about 1 million shares in calls recently on the 82313F. They're the DRM for GME. So if they're picking up inventory, that might be a good indication. Hold on, I'm trying to find Rentec here. You said they had 1 million shares? 1.22? I'm not seeing that. I don't see Rentec with any ownership. But Wolverine increasing their call interest is interesting. Yep, I don't see anything from Rentec. All right, yeah, let me know, Premium Pete. Word feels like bulls are pumping to pad their end of year performance. Not that anything actually bullish fundamentally. I mean, Friday was interesting, right? Like we broke up through the top of that kind of that put interest that had piled in protectively over the like 4350 level. And then we just spent the rest of the day like slow squeezing longer dated sold calls. There wasn't even a lot of bullish shit going on, right? It was just like sold puts and squeezing out short calls. Don't even play with my GME my GM emotions. I mean, I'm not trying to, but the DRM picking up uh, a bunch of calls is it's interesting. Thanks, Newport New Me. Everyone just walk away from GME. You'll feel so much better. I'm trying to, man. I still need an exit though. I guess I could just sell now and take my money, but I feel like I could sell it for at least a little bit more. What's the GME play? I don't know, what, like 2-week debit spreads or something like that? You could probably do like end of like Nov 31 debit spreads. Let's take a look. Hold on. Let's do. We'll call GME, figure price targets Gamma Max, which is like 17 right now. November 24. Break evens at 13.37. They're $37 a contract. If we tested Gamma Max, it's a 6 to, well, let's see. If we tested it at OPEX, at the peak of OPEX, it'd be like 21, 22. So up to an 800% return. If you go with the December 15s, yeah, I mean you wouldn't lose as much money if it traded flat. You could actually get through almost. You could almost get all the way through OPEX. Sub 10% loss. Provided it doesn't fucking drop more. Well, even if it does, like, you'd still be like 11, 12% loss. But you cap your profitability. But yeah, that's probably what I would target. If you just buy calls and nothing happens, which becomes increasingly more and more common with GME, right? You're looking at like a 70% loss if it trades flat or IV crushes. So I think debit spreads are definitely the way to go there. I suppose if you're gonna trade the possibility that it doesn't happen, you could do like maybe you could do something like this, like sell like a 12.11 and then buy like a 13.1750. Yep. 10. 12.50, 10. That could be a way of handling it. Minimizes your total debit, but it increases your max loss if it drops. That could be kind of fun. A little bit of downside protection to like $12. Where you only lose your debit. And then credit mostly covers about 50% of the upside cost. Yeah, I'll try to make that a little bigger so you guys can see it. Anyway, that seems like a fine place to start. So yeah, that's GME. there's a little bit of covering going on like IJH right now, but XRT is still on reg show. So if XRT comes off reg show, or the borrow rate starts to increase substantially, which hasn't happened, those would be the two things you'd be looking for. Anyway, Caterpillar this week looks kind of interesting. It had a really, really fucking shitty consolidation week last week, and ultimately, like, the price action ended up kind of getting stuffed. Um, right here under that, like, 240 sold calls. And you know, anytime we even came close to testing that, like 260 puts would come in and drive the price back down. So pretty shitty for most of the week. But Friday it finally broke out, and I said maybe I'd take a position if we tested 240 into the end of the week. So I did. I took November 17 240 call. And basically, this is, you know, with the 240s falling off this week, and the pre SLD price improvement. Hopefully, this can kind of move up to that prior price target now with a little less resistance to the upside. Really, really just shitty, like, descending inverse head and shoulders, right? And it just took a really long time to break out. The first two breakouts failed. Nothing you can do about it, but another shot there, maybe. Upstart looks like shit. So this is really bad. After earnings, you see that liquidity on Upstart is almost where it was when it started squeezing the last couple of times. And the reason this is bad is that the price is going down and liquidity is improving, which means selling, right? So longer term investors are getting out, and this is going to provide liquidity to anybody interested in short selling it, which probably means the price will be driven down lower. One caveat to that, though, is that there's still a lot of ETF liquidity, especially here, that has yet to be realized. Thanks, Dirk. Um, and that may kind of cause like a little pump in the interim before, and once that's cleared out, then they can just short the fuck out of it. So keep an eye on that, especially going through the OPEX period. If they're going to clear out any liquidity, or if the market keeps pumping, this could have like a, I don't know, maybe like a $5 turnaround just on the rest of that synthetic liquidity getting covered. After that, though, yeah, it looks really bad. Their forward guidance wasn't good. I kind of warned about this going into their earnings, but the, you know, credit conditions are tightening, but more so secondary market credit conditions are getting really bad, which means banks aren't picking up loans. And if Upstart has to hold the loans it originates on its balance sheet, it's pretty bad for its book value. Um, and that can affect it quite a lot over time. And you know, before the Castleview deal, you know, we were seeing Upstart with a very low book value due to the amount of loan origination they were unable to kind of sell off. And then, you know, as we kind of hit that Goldilocks zone into the middle of the year, we got the AI bubble kind of surging. People became a lot more confident in it. The Castleview deal freed up a lot of that. They were able to dump a bunch of that origination and free up their balance sheet, and that, you know, kind of triggered Upstart squeeze. But now we're kind of returning to the like 2022 conditions, and so while it may still be like a really good stock to sell covered calls on because of its really low float and high volatility, I would be very cautious about getting in at a price that's too high. You don't want to end up with a bad cost basis, bailing yourself out from underwater when you could just be making week over week yields on it, right? 1 second. Sorry. trying not to sneeze my brains out. So Fubo next up. So Fubo broke through back through that kind of long-term trend there, and we did it before earnings as well. Um, and then, like a little bit of earnings short, pre-earnings short covering, and earnings potential drove us back up into the $3 range, but we've come back down again. The interesting thing here is that not a lot of covering really happened, right? A little bit, but not a lot. So Fubo's still moderately illiquid, which makes it riskier to sell covered calls on. I know everyone sold covered calls at like 250 and 3. I know at least I did. I heard a lot of you did, but the problem with that is that we may not stay down here for long. If Russell pressures Fubo right now, we get another, couple like 200 BPS days on IWM or RTY. We may see more covering on Fubo, and that could kind of bounce it right back up to that same range. Usually Fubo doesn't cross 264 without kind of tapping $3. It usually picks up a big surge of delta hedging above 250, and then it picks up kind of another big surge of delta hedging as it approaches 3. And that range tends to be like very quickly realized, right? And we've seen that a lot over the last few months. It's really advantageous if you are selling cover calls. I think the biggest worry is that we're going to break higher. I don't think that's a concern yet. There's still a lot of shorts in Fubo, and I don't even though they're doing well on their earnings so far, it'll only take one miss for the shorts to be right, and for Fubo to fall back under $2, right? And so until Fubo attains their goal of positive EBIT, they're probably going to stay. Like the shorts are just going to stay on it. And if Fubo does hit that target, then we might see some real covering. But right now, yeah, I think we're still going to be pretty range bound in the like 250, maybe 350 range. I don't think 4 is going to happen very often, or if at all. So Siri, this has just been kind of a wild ride with the borrow rate fluctuating all over the place. It's still massively short, but the shorts are looking for that exit with the merger with Liberty Media, and so they don't really want to cover anything, right, until they get all that free liquidity. And that kind of puts us in a position where we get these little bouts of short covering that move us like 30 cents, and then massive piles of puts at $5 drive us right back down again. I don't really see that changing anytime soon. I have a bunch of leaps on it still at like $5, $6, and $7. I don't think they're gonna let it break 5. But if it's going to, it's pretty illiquid right now. So it's pretty illiquid and starting from a slightly higher low than the prior two like kind of liquidity realization events that happened on the prior OPEX and the ETF FTD period. So it's possible that we get a slight move up. I don't think it's going to be like as dramatic as the previous one, but there's definitely something there, right? So I don't know. It's probably not even worth speculating on, but if you want to, there it is. Macy's is coming up to earnings, and their expectation is 0. So their expected net EPS is expected to be 0. I think there's a decent chance they could beat. I mean, the prior EPS was 12, and they actually beat on it. It was mostly due to reduced forward guidance that the stock fell. I think it's moderately illiquid. I mean, obviously, like Siri, this has a huge float, but it is an XRT. So if XRT gets pulled off Reg Show, it might have a little more potential. The yield on cost right now is like 6%. So, pretty decent dividend. I don't know if they're going to get rid of that dividend anytime soon, but I'm sure there's some question of if it's going to be sustainable as their free cash flows fall off. So, um, if you bought some shares to kind of hold through this period, the coming weeks might present a bit of an exit if you didn't get out here. I don't know if this is really worth playing with options. It might be. But remember, the dividend comes up shortly after earnings, so whatever realization or price improvement happens there probably won't be long lived. Top's kind of getting pretty tight again, although it still has quite a bit of range to the downside, and you really don't want to buy the wrong option here. So there could be an opportunity with that over the next like week or so. Maybe this would be better after OPEX. Although I think the effect of OPEX on the major indices is going to be negative, so there might not be a very good time to get in. BTU's been kind of stable. I don't know if you guys have been selling CSPs against this, but this kind of range on BTU is, I think, is still a decent buy-in range, like 20 to 21.50. CSPs here probably aren't going to fall in the money, but if this were to reject and commodities fall lower on like weakness in the Chinese economy, you might get a fill on CSPs sub $20 or like sub $21. So that might be advantageous, but it's probably still just decent for income. If you already own BTU and you have a lower cost basis, I think CCs above like 24 aren't too bad right now. The dividend's off the table though, so be a little careful with a bounce back. Try not to sell too much. Probably want to avoid too much theta initially. And then if it kind of moves back above into the 2350 range and stabilizes, then that kind of opens up the opportunity for selling, like 25 to 26. And then you probably slap a little more theta on those. So Apple's breaking out of its long-term trend. I'm going to go over this one because it's running pretty close to the prior resistance. And if you see here, the last bounce it had, it rejected at the lower resistance. So if this is going to set a new low, this may be an opportunity to either sell calls or pick up maybe like 85 or 80 puts. This one I'll write more about if the opportunity comes up, but a reversal from here could be really good, right? Like if it does end up breaking out and failing, or like if it ends up failing this breakout, I think a pullback to 80 is pretty reasonable, and that's a decent move. So, but I'll update that one in Pickles picks if I kind of see it shaping up. Right now, call interest is just a little too strong to go short. So it may be a better opportunity if on a rejection to take like the sold call approach and wait for that call interest to break down a little bit. I'm gonna go over SPX and ES. Are there any ones that anybody else wanted to ask about? Opinions on save and possible sale to JetBlue. Man, people have been speculating on that for like a year and a half and nothing's happened. I don't know if it's worth playing. I think more money's been thrown at hoping that would happen than has been made off of anything actually happening. Anything on T? I mean, as long as the dividend doesn't change, I'm not selling it. Yeah, I mean, it kind of recovered from its lows. It's a little bit above my cost basis, not much. Uh, Still yielding better than treasuries, so I have no reason to get rid of it. That's kind of what I'm holding it for. I do expect over the next year and a half that utilities will pick back up some interest. But I think AT&T is fine. I don't think I don't think they're going anywhere or anything. And right now the dividend doesn't appear to be at risk. Their cash flows are improving in line with what the CEO promised they would. Finally, it took a little while, but yeah, they're getting there. You selling calls on T? I do a little bit, not much. I think I have like some 16s out right now for OPEX, mostly in line with like what I think larger index moves are going to be. I don't really have a good reason to. It's barely worth it. Even at like 30 and 45 DTE, it's better just to collect the yield and drip, right? And as long as it's below like 1622, like I'm just gonna take the drip on the like 7.25%, right? And just keep accumulating more shares. And then if it gets above 18, I'll probably turn drip off, and then just collect income. Snap, like Snapchat. What about them? Uh, I don't know. It's still just chopping. It's kind of fun to buy it around like $8. So that made me so much fucking money in 2022. Yeah, those days are over, Dork. 2020. Yeah. Yeah, that's gone. Yeah, it's pretty range bound. I mean, it's shown some slight improvement over the highs, so there might be a little bit of accumulation going on, but this could drag out for years, right? Before it actually moves up. And yeah, this is on the weekly, so provided they can survive that long, and they may not be able to, right? Last I looked, their debt wasn't that great. Yeah, they have quite a lot of debt. Um, Fortunately, not a lot of it's current, but I would have to look at the maturation on the 4 billion they're carrying, because that could be a huge fucking risk given that they have negative cash flows. It's definitely not something that I want to buy and hold right now. WCC asking for a friend. Is that friend you? We still playing this thing? Think it's ready for its next leg down? Yeah, might be. Shipping's kind of collapsing. I think this actually, and I think this one also are both represent pretty decent shorts right now. YCC came up like last week, but I didn't think the market was gonna pull down hard enough. I think this is the fucking way overvalued right now. It's peaking at all-time highs, and the transportation sector is just falling apart at the seams. Did you see wholesale inventories going into Black Friday? Like wholesale and retail inventories are falling off a cliff. As far as like holiday season goes, it's pretty bad. WCC subsidiaries are cutting back on overtime hours for employees, citing low demand. However, they're still as busy as they are. Maybe a little bit longer then, but yeah, I think it's due for a drop. Is there an ETF that's writing puts on all the companies that need to refi their debt in the next 12 months? If there isn't, there will be, I'm sure. Just typed diarrhea into my phone's messaging app to find a GIF, and it was one with your face. You're saturating the market. Yeah, I know. I'm becoming the face of all memes. It's a slow takeover, but it's happening. Can you take a look at X? I've been selling CCs on part of my holdings. I'm wondering about the range from now till the end of the year. You really love that fucking stock. It's had a lot of volatility with all the buyout news, although I'm not sure any of that is actually coalesced into a buyout plan, right? It just seemed to be like a lot of announcements of potential buyouts. Is there actually any buyout talk on the table? I don't expect steel to do well. So, short of like the volatility surrounding a possible purchase, um, I would say selling CCs is moderately safe. Even on the in the event of those like announcements, right? And the few times they've happened, like the pullback has been pretty immediate. China doesn't look any stronger. So yeah, I would say that covered call selling here is probably not only advantageous, but very likely to get unassigned, not very likely to remain unassigned over like a 30 to 45-day period. Because the like the buyout valuations aren't anywhere near what it's actually worth. IEP, massive dividend on that garbage, and Icon is a decent investor. I mean, Icon's old as shit, and he's not that great of an investor based on IEP's returns. I mean, they're okay. It's really a question of do you want exposure to those industries or not? Because there's a lot of, close-ended funds that perform just as well or better than IEP. So yeah, I'm not really interested in fucking with it. There's it's too much up in the air. I don't like the way the share distribution works. So I'm not really interested in it. Good morning, Esa. There've been some talks of offers from several companies, but bidders can't comment. Well, I mean, if you think you're going to get substantially more money from a buyout, then obviously selling covered calls is super risky. But I have a feeling that no one's going to move to buyout immediately just because we're still a little far from any kind of larger commodity cycle. I did. I put a photo in the SPX chat last night. All right. So any other ones before we get onto the indexes? NVST? Oh, that sounds like a penny stock. It better not be a penny stock. Okay, it's not. Why do I remember this from something? Is this like the dental company? Ugh. Dude, that margin contraction is fierce. Um, Cash flows are okay. Liabilities don't look too bad. People aren't going to stop having teeth. Why is it trading below book? Like, why is it trading at a discount to book though? Some insider buying. Huh. I think you might need to look into a bit more than just their debt. Hmm. Yeah, earnings seem to be pretty inconsistent as of late. Maybe look at their competitors. Do some comparative analysis across that sector. See what you come up with. Because I suspect the only issue, I suspect debt's not the only issue here. Disney? Fucking, I don't care about Disney. It's probably just gonna come back down to the $80 range. They got their margins back to positive, which could be good, but eh. Too many issues. Maybe after all the Hulu shit's figured out and revenues start improving on the park side. A little while back, you mentioned you have long-term puts on Meta. What's your time horizon on those, if I may ask? I'm willing to stay short on it out until March. Um, I closed some of them out on the most recent drop, but I've been adding since it went back above 320. I could see myself continuing to add for March 15. But I was previously short at 305 and 300. I got stopped out of a few of those for profit as the market started to rally back. I still have some Jan at 300, about 25% of what I had, and I've been adding to March. I do think shorting Meta is kind of a mistake unless we get another major market correction or a crash, right? If you're just shorting on the fundamentals alone, it's probably a bit risky. My allocation to my Meta short isn't very big. I think their debt's pretty stable. I think they have plenty of free cash flow. They're probably a little overvalued, but not so much that I think they're gonna go back to like I don't think the price is gonna drop more than maybe like 7 or 8% unless we get a big correction, and that's more due to mechanics than fundamentals. Or Zuckerberg starts dumping more money into the fucking metaverse again. Tesla's a bit tricky, actually. I probably don't want to. I don't probably don't want to play either or on Tesla. If it breaks 217 again, very similar setup to the last time I went long on it. So yeah, if it breaks 217 again, I'd probably be kind of willing to take like maybe like 220 calls and target that 27 test again, so similar price targets to the last time. If it fails to break 217, that could be a good opportunity for maybe like 210p. But that's the test you're looking for. Obviously, this is going to be heavily dictated by what indexes do. But there's a pretty decent amount of call interest at 215. Friday had pretty good performance, so there might be some Tesla bulls this week to drive things higher. There's a lot of sold calls at 220. But yeah, if it breaks, so that's kind of why if it gets momentum and breaks up through 220, it's very likely to squeeze those out and push into that higher range, like we saw at the beginning of last week, when the 225 calls broke or 220 calls broke, which was they started to capitulate right about there, kind of squeezed out, immediately fell back. This time there should be a little bit more support above 220. So it probably won't fail as quickly as the last tests did. Gamma Max on Netflix. 482.78. I will say that it's pretty rare for Netflix to hit Gamma Max. But with the current setup, it doesn't look impossible. Semiconductor, I don't know. This could have a lot more accumulation. Margins moved positive, but that may not last. Operating expenses aren't very high. Cash flows are kind of shit. Yeah, this doesn't look particularly exciting. I'm gonna be honest. Seems like they've been doing okay. And it is accumulating, but it may accumulate quite a bit longer. I don't really know much about the company. Gallium processors are a problem, so that might be something to consider, especially for a US based company, since China's cutting off the flow of gallium to the US. Um, that could be a risk that you need to investigate a little bit. I already went over Apple, beans and greens. Just rewind. Nvidia, I think Nvidia is either going to squeeze out more short calls to the upside at 85 and 90, or it's going to fail here. I think there's a decent chance that Nvidia pulls back a little bit this week. We have earnings coming up on the 21st, so the week after next, or the week after this week. 480 is kind of resistance. There wasn't a lot of long call interest to the upside on the chain last week above 480. So 480 was kind of the top tick target there. If you guys remember, like the long Nvidia Pickles pick play, that kind of I put the diagram in there, but it kind of topped out around 480. I'll check it right now, but I don't think it's too dissimilar. The bigger problem would be that, you know, if indexes surge, there's not a lot of resistance to the upside of 480 either. So it could get driven up higher, but I would say, like, the transition range from 480 to like 500 is pretty weak. So we would need a lot of momentum driven by the indexes. Don't worry, Gork. Jensen's engineering the next Silk Road project to ensure China gets the best American chips available. Yeah, that's really, yeah. We talked about that a little bit, but I'm sure we'll talk about it more here in a second. All right, so that's good for equities. Let's hop over and we'll talk about indexes. Give me a second. Hey, Dorg. Thank you so much, Enormous Johnson, for becoming a Dillionaire. I'll play the song before I appreciate it. Hit me up on the Discord. I'll get you added at the end of the stream, man. Hey, Dorg. Yeah, I can hear you just fine. I just didn't want to blast the volume until the song was over.
Oh, gotcha.
Because otherwise I'd actually kill everyone. Where the fuck is Jay Fresh? Did he really quit because I
don't know.
Because I didn't quant Mayfair?
Well, I'm calling him out for being a liar, and so he probably just doesn't want to have me confront him about it.
Oh, I see. It's pretty standard.
Yeah. He said his calculations are perfect, and I'm pointing out that they're not.
Oh. Why do you have to do this?
He spoke in absolutes, and now I am perturbed, but it's okay.
Wait.
I told him I'd slowly increase the pH in his pool over time until and he won't be able to figure out why it just keeps going down.
You should increase the muriatic acid levels in the pool.
That's what I was going to do.
Because you can't get rid of it.
I was thinking of maybe instead just taking like a painter's bucket full of like rock salt and just dumping it in his pool every night.
Okay.
Until like, the water density gets high enough that like you can't help but just float in it.
Are you going to clean the turds out too?
No, I'm going to put more turds in.
Oh, okay. Wow, that's really vicious. I'm glad I wasn't there for that meeting.
You know what? He's just a cat. You got to treat him like a cat.
He can be a little chaotic at times.
Yeah, also,
don't forget, he's also very focused on his current venture. which is, you
Yeah.
know, trying to get AI to make more penises and vaginas.
Yeah, yeah, I know. At some point, I got to get him to something else. I mean, I moved on to more mature ventures such as Elmo taking bong rips and things like that. But
Nice, nice.
yeah,
I
there's
will.
other fun ways to
I
make
will
AI
say
do
he was moderately successful recently. A firm had to I don't know if you saw this, but Overwatch League, I believe, had to pull some of their AI artwork they created because it randomly generated a giant pile of penises.
that. Really?
Yeah,
You know, that was one of my primary ventures going on was making giant piles of weens, and so I'll take a little bit of credit for that.
all right, fair.
JFresh was more focused on like placement of the singular ween, and I was like, it's all about quantity.
You know, I do think that this happened before you really started getting into it, though.
Hmm. Okay, well
So
I rescind taking credit then.
we'll we'll figure it out.
Yeah, there were obviously more trailblazing pioneers than just me and JFresh.
What led to JFresh's face melter call in Friday in the PM? Mostly trolling. That ended up coming true.
Well, I mean, like
But
you guys.
we were all pretty aware that like and we'd mentioned it for like what 3 days. I know JFresh had, I had. I think you'd mentioned it. If we broke to the upside at any point last week, we were probably going to start squeezing out some of the sold calls. And while the prior tests failed, the risk was there. And then Friday we did actually squeeze some of them out.
Yeah,
So it was kind of
on
just
Friday
hanging
night
over the
or
price
on
action
Thursday
all
night.
week. Sorry, go ahead.
I was just on Thursday night. Because we were like testing DN, and I like on Thursday night. You and Jay Fresh were both like bounce off DN, and I was like, I gotta take the other side. So I was like failure DN, and then we go down.
Oh, did you call a drop on Thursday night?
Yeah, I did. I was like, well, I mean, you guys were both bullish, and I was like, you know what, we gotta have some diversity here, and I also am just a bear, and so I got to take the bearish positioning,
Well,
and
if it's any consolation, Dork, I got stopped out on the second green hourly candle of the, and then it proceeded to go up just straight up for the next 4 hours. So you can take solace in the fact that I didn't make any money on my. Well, I did make a little money, but no, I didn't make a lot of money on my prediction to the upside.
yeah, I take no solace in that because I also missed out on tripling my port on a single call, so.
I think you're not the only one. I think a lot of people got stopped out on the volatility when we first kind of tested like the 4385 range, which was reasonable. There was no reason to think that we would just start squeezing long dated short calls for the rest of the day, right?
Yeah, dude, Vol Bears got real screwed over on Friday.
Yeah, I mean it went pretty nuts. And what was weird about that is like they were you know they were selling puts to cover like the like volatility pickup from the like spot up vol up kind of thing that was going on with the short calls getting squeezed. And so like the entire end of day, like the last 2 hours of price action was basically just short calls getting squeezed and short puts being sold. But there was like no calls coming in, so there's no way to like really kind of figure out how long that's going to go on for, right? It's really futures driven at that point.
Right. Well, so well, I would love to talk about Friday, but just to kind of recap over the last week, right? Like, so JFresh was spot on with that. They the forces in the market would like for realized volatility to crush, while implied volatility kind of stays flat, right? And
Sorry, well, this is being recorded, right? He
It
just said I
is.
was right.
He did,
Yeah.
yeah.
Okay.
I don't know what's going on with you two guys, but you really need to fuck and like work it out.
We really do.
Yeah, we're just gonna keep messing
It's
with
just
AI together.
way too much sexual tension because of the furry porn that you guys are making together.
You know,
I can cut it with a knife. I mean,
the furry part is not the essential part. It's just like that is what helps get it past the whatever the
content
blocking
filters.
thing. Yeah.
If you tell Dolly 3 to paint a woman in a burqa, it's like, whoa. Hold
There's
on,
at
this
least 4
content
red
is
flags
not
there.
safe. It really doesn't like the mention of women at all.
Yeah. It's very sexist.
I was making a stream card last night of Carl's wife coming to visit me as she does. And it was insanely difficult. I had to basically just create like a noir scene and then hope it would like slap a woman in there.
Did you try
like
a
on
man
its
without a
own, which
penis?
took like 50 iterations? Huh?
Did you try a man without a penis? That would probably be easier at that point.
No, I didn't. Although that's a great idea. Maybe I'll try that later.
The
Or
opposite
female
of a
man.
man.
Interesting. So just kind of try to paint the scene in the negative space.
Yes.
I like it. I like how you're thinking.
Yeah.
Look,
You know,
so-
another one that we thought was really
so
clever-
more of a not penis kind of approach.
Yeah, not hot dog.
Not hot
Yeah.
dog. All right.
Another one we tried. We were really proud of thinking it, but it ended up not working. Converting things to hexadecimal and putting it in, it just spit out gibberish. So
I've tried other languages.
OpenAI does not speak hexadecimal.
So my cursory knowledge of the Italian language is actually what led to the first cat penis memes that unfortunately started all of this really weird shit that you guys have gotten into.
Something beautiful. Yeah.
Ciao Bella.
I've just been at this point. I'm making pickles with like that are smoking the bong. That's my new thing.
Yeah, he went hard into the bong rips,
The
which
clown
you know.
drinking beer bong. Yeah, that was fun.
I don't know if OpenAI has an inherent problem with weed. It doesn't care about like it loves cigarettes. If you've ever tried to generate an image with cigarettes, like clearly Big Tobacco is one of the investors because not only does it throw in the brands, one time it made me like Joe Camel. Do you remember Joe Camel?
Yeah.
Like the fun cartoon camel that was like, "Hey kids, let's smoke cigarettes."
You typed in the word Joe Camel and it worked?
I didn't type in Joe Camel. I was actually trying to I asked it to paint a Persian centaur with a camel body. And it just gave me Joe Camel. Joe Camel smoking a pack of cool cigarettes, which aren't even camels, while playing pool.
Ooh, yeah, that sounds like a copyright violation right there.
Maybe it's not, though. Maybe there's certain copyrights they're allowed to violate because that advertising format has been previously banned.
Huh.
Right? I can see a financial incentive there. There's not enough kids smoking today. I mean, you could look at like BTI and Altria's like revenues over the last like 5 years. There's just simply not enough teenage smokers. And so, you know, if they could use but if they could use AI to change that, that would be really good for them.
Yeah, I see
I'm
that.
gonna start a conversation with Chat GPT and see if it'll try to convince me that smoking cigarettes is a good idea.
There we go. You see, now we're branching out.
Yeah.
So, back to, I mean, I don't know. What did our viewer count drop to?
I don't know. Well, hopefully enough that we can talk about stocks.
Hopefully.
Probably went up.
Fuck, there's
Like
actually more.
Harvard.
There's more people. Yeah,
Yeah.
we picked up like 20 people.
Shit.
Well,
All right.
we tried.
Well, so anyway, so back to last week, right? We saw at the beginning of the week and like through like the middle, we saw volatility getting like realized volatility sort of tapering, right?
It
Sort
tried.
of.
Yeah, but the thing is that like watching what was happening like with like zero DTE volume, right? What basically, you can sort of forward extrapolate that, but what was happening to make that happen was there was a crap ton of vol being sold all over the place, right? Like just like a wall of sold calls essentially was just rolling in to just stamp out upside. And it's when you
Yeah.
want VIX to stay low and you want to control the price, you need to just sell options, right? So that was what's happening. And then on Friday, right, that all just got blown up and the market went up pretty much as fast as it possibly could have.
Was it as fast? I don't know. I felt like it kind of. I didn't watch the whole day. I just kind of. I did not want to trade that, and I'm glad. um, but I don't know. I went back and looked at it. It didn't. It seemed like it was painfully. It was just like an up pain, just like dribble.
It was
Oh,
super,
it was
super
bad.
fucking slow. There was a couple breakouts, but yeah, it was mostly just the worst. It was very
Well,
easy
the
to
thing
get
is,
stopped out of if you had any risk management at all. It was terrible. It was a terrible upside move.
Yeah, because like if you're in zero DTEs after what the pump at 120, 130. I mean, there's no money in that, right? It's just like bled all the delta decayed as it went up. But yeah, there's some breakouts. I mean, if you just jumped in, well, I don't even know. I mean, it's definitely getting
They were
trickier.
well. The problem was the
So
calls were
expensive at the
expensive
end
as
of the day.
shit.
Yeah.
Yeah, it wasn't it wasn't worth buying the calls to keep capturing like the move, even though the move ended up being like bigger. And you would have gone like in the money, and you would have gotten your delta that way. Like buying out of the money calls at almost every point above like 4405 was just a huge risk.
Yeah.
I don't know. So like I don't necessarily mean like the market like went up quickly like in relative terms, right? But it went up as quick as it could have. Like that's what that's it just we pinned to the ceiling and then we just essentially pushed the ceiling up like,
Yeah.
throughout the day.
Yeah,
Which
it's really interesting.
And this was really their first opportunity to do that, right? Because Gamma Max finally lifted a bit. Earlier in the week, our Gamma Max was like very, very close to like 4,400. We were down at like, I think 4416 at one point, right? And then, it kind of moved up from Wednesday on. And so this was the first like upside push that had a slightly higher gamma max on the weekly contract, at least.
Yeah,
But that was just because of increasing out of the money sold calls, so I still don't think that's necessarily bullish.
honestly, I think a lot of it was just FOMO. Not necessarily like retail FOMO, but just FOMO in general because people had gotten very bearish.
Yeah.
I don't want to say very bearish, but people had gotten scared to sell volatility, and then I guess people started selling. I'm not really sure. It doesn't really make sense to me why they would push there. I mean, there's some tinfoil theories that people, knew that Moody's was going to say something at the end of the day, so they're trying to like de-risk. But who knows?
Well, it wasn't a de-risk. It was just a fucking squoze. Like so
It was not that aggressive of a squeeze. I
Yeah.
mean, we squeezed a little bit at like 4,400, 4,405. But then that was basically it, and it was very small.
Well, we squeezed out all the 0 DTE short calls. Like, that was the crazy part.
Yeah,
Yeah.
yeah. And there
So
were
that's what I
a
feared
lot
about.
of them. Like on
Yeah.
that first test of 85, we saw like negative, or I guess it was like positive 800,000 delta came in on like the short call side, and then that all got squeezed out by the end of the day.
Yeah, that's crazy. Like, so there's a tinfoil theory about, like, so the thing is, and this is where I kind of start to diverge from you guys a little bit. I think Girk, you're probably more open to the idea, but like, it's not necessarily that there's like bulls and bears selling puts and selling calls. Like, it's not just like the guys selling calls are just super bearish, right? And the guys selling puts are all just super bullish. There's definitely like it's people that are taking, volatility trades, right, that are doing this. And so when you short vol, you don't just, sell puts necessarily. Like, you're also selling calls. And so, like, I think
Yeah,
there's
I mean, there's different blends of that for sure, but and definitely the selling puts is much more prevalent right now. I mean, if you look back over the last 2 years, the primary thing that's changed from 2022 to 2023 is like almost a doubling of the amount of puts.
right. And so there's a reason behind that, right? So
Yeah, markets go up.
yeah, exactly. So if you have a core fund, right, you want to protect it. So like that's what I think is kind of happening there. But I think that this is all sort of an effort to, while you want the market to go up, you don't want it to necessarily skyrocket, because when that happens, right, you get this divergence from realized and implied vol, where
Yeah.
implied volatility, because options are insurance contracts, implied volatility should always be higher than realized vol.
Yeah, well, I mean, historically it is, right? And I mean, this is a long-standing. This is known that with the price of uh, with the price of puts on indexes. I mean, the way that they're priced to make your money, for it to be appropriately priced, you need to crash like every 2 years.
Yeah, and that, but
So
that's just what's being priced in, right?
yeah, I mean, that's just that's the. I mean, people's demand for downside safety is larger than the actual need for it, right? Because they're scared, right? They want to protect their profits as they keep going up. And in the ZERP era, things just keep going up, 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 and never really revert, right? Everything can go up, bonds up, stocks up, like everything. How real estate, everything.
Well, yeah, ZERP, like, it's not necessarily stocks go up so much as it's rates go down, right? That's sort of that's like the mantra of ZERP.
Well, yeah, but I mean, but also with all the QE, right? They're just pumping money in, so everything goes up because the value of the dollar goes down, which I don't think has been very well captured over the last 30 years.
Probably not.
I'm a tinfoiler on that. But yeah, I mean, back to the volatility. I threw some charts up if people want to see them.
Oh, okay.
I like the charts.
So the first one is VIX versus the average historical volatility over the last 30 trading days. And you
That's
can kind of see,
that's literally
huh?
the chart I just pissed. Never mind.
Oh, oh, you posted one? That's cool.
It's cool. This is fine. This is actually easier to see.
Yeah, labels and all that stuff. It's fun.
Ew.
Yeah, as you can see, like there are a number of times where VIX gets crushed down to about historical vol. That's kind of like the lower bound, but most of the time it's sitting above, some amount above it. Basically saying that investors expect volatility to rise at a future date. But what's interesting is that right now we're actually far enough below that it's become kind of alarming. I mean, the VIX isn't even the actual at the money IV. The actual at the money IV is even lower, and so we are basically the option chain is pricing in a dramatic drop in vol.
Yeah, 30-day at
The
the money IVs at like 14.2.
Yeah, the problem the problem is that vol's been going up since August. And this week, I mean, you mentioned last week I said their goal is going to be to crush vol, to justify the premiums they sold. Vol didn't crush, right? I mean, it maybe a teeny bit, but it's still quite elevated. And so if they don't get vol to crush in the next, I mean, if it doesn't crush in the next week, it's going to be quite interesting because right now
Vol crushing into the monthly OPEX expiration and OPEX, or the VIXpiration and OPEX. That'll be interesting. Yeah.
But right now there's more OI on the November expiry than there is on January, which is kind of notable, right? Because January and December are usually quite large. I mean, December right now is
how's March?
Not very high at all yet.
Interesting.
Yeah, I can actually pull that chart up real quick.
It kind of makes sense that November's overcrowded. Before we move on to the breadth and the meme 7, though, I did want to kind of comment also on the volatility landscape. So I mean, you're right? Like obviously, like going into this week, there was a strong desire from the MMs to crush realized vol, and they tried really hard, right? Like it's really obvious that participants tried very, very hard to crush realized vol. We saw probably more call selling through this week than we have near the money in a long time.
Yeah, so calls are elevating a little bit historically.
So I'm kind of in between you guys a little bit, in that like I think we're seeing vol sellers, vol shorts, or whoever has a strong interest in maintaining a volatility short. They're selling both sides, right? They're selling the call and the put side in order to crush vol. And obviously, realized vol ended up still higher into the end of this week. I think even more so than at the beginning of this week. And so ultimately they failed because they got squeezed out of the top side of their position. But on Wednesday they gotten squeezed out of the bottom side, and that really fucked everything up. I think if Wednesday hadn't had such a terrible print on the 30-year, they might have actually been able to get things more in line. But this kind of arbitrage opportunity between realized vol and implied vol can either be really, really bullish or really bearish, right? Because either realized vol needs to drop to where implied volatility is, or implied volatility needs to come up to realized vol. And I think they're trying to do everything they can to prevent either of those scenarios from happening. And it's very odd for that arbitrage opportunity to exist for really long periods of time, which you kind of pointed out with your chart, right? And that and this almost never happens, and when it does, it doesn't generally happen for long periods of time, right? It's usually like a day or two, and then they're kind of back in line. And something else interesting this week is that if you look at VIX futures, have picked up pretty significantly on the call side, but overall VIX futures interest has dropped dramatically. So on the backdrop of all of this, we have a lot of short VIX short VIX futures falling off into this week as they take profits from the big bounce, right? And that might be something that's kind of acting against arbitrators' interest in closing this trade. But if vol picks up on the downside, that's going to push yields higher and drive more interest into long vol, right? So and that's a big risk for people that are currently closing out of bond shorts as well.
Yeah, I was just checking. Looks like SVIX, which is a short VIX futures ETF, UVIX, which is a 2x long VIX futures ETF,
SVIX has been picking up a bunch of AUM.
And UVXY, which is just short-term VIX futures ETF. Those are all still on Reg Show, and they've been on for quite some time.
Really?
So lots of weird leverage.
I'm wondering if this culminates in kind of a collapse of short vol positioning while they have an opportunity to run for the door, right? With realized vol, slightly higher than IV, like at the money IV 30. Like this could be a really good opportunity for short vol to just close out over this next week entirely. And if they do, obviously that's super bearish, but they do have a brief advantage, right?
Yeah. I mean, it's such a large position, though. It's going to be hard to completely exit those.
Well, it's just first one out the door is the winner, right?
Yeah.
Yeah. So, like,
I mean, yeah, and these short positions have been, they've steadied out, if not started to decline, since August, basically. So I think there is some, pulling away of from that trade, but it's still so large that, I mean, we're talking about millions, just millions of puts that have to be closed.
So here's the big question though, is like, why are we destabilizing with this highly leveraged of a position? That's the part that gets my alarm bells kind of going, is like we destabilized to the downside on Thursday and then destabilized to the upside on Friday. Like, it's not like the short vol is gaining ground right now. They're actually losing ground. And, that's what's got me kind of weirded out about what's happening. So I'm kind of like I'm apprehensive to say we're gonna like go straight down or straight up. I mean, the ideal situation for any sort of vol short right now is for us to just slowly melt up, right, and not really like slowly kind of back out of short calls.
I mean, I think short vol's already in the ideal situation to exit, right? Like we've got 50-60 bucks of padding to the downside on GN that they can de-risk in while the market maker provides liquidity and creates a safety net for them. And they don't really need anything higher, because then they risk, because then they would need to compound short vol, right? So if prices were to go higher, or they wanted prices higher, they would have to continue compounding short vol, and I think they're just in a great position to de-risk right now. Like, it took a little while, it took 3 months, right, for them to get above GN in any kind of sustainable way, but we're here now, right? We're above GN. They've got that foothold. So I think the question is, does the de-risking behavior continue, and do they take advantage of it? Because if they do, we could fall really fast, right?
Yeah, it's not only that too. There's this wide open arbitrage opportunity too, like you were talking about.
Yeah.
It's just sitting there, right? So like,
yeah, that creates a ton of pressure on them to de-risk.
Yeah, exactly. And because not only will it's you're closing up the arbitrage, right? And in doing so, you're sort of injecting like a risk-free return, but it's not really a return, right? They're not like profiting. Like, I mean, they're probably profiting because they're taking profits, but like you're also, you have a good cushion where, you know that you're going to be, doing pretty good on exiting that position, right? Until that gap closes.
Yeah. Well, I mean, yeah, and like this is the first time they've had that. Like if we look, oh, fuck, hold on. So if we go back and we look at like the last 3 months, in September, we ran up to, and this was like 4,500 was basically GN at the time. They briefly got a window, couple days where we were slightly above GN, but it was extremely short lived, and GN may have actually been a little higher. I'd have to look. What was it? End of August into September? 1 second.
On the weekly?
No, the monthly. The one that matters.
Oh. Yeah, that one.
Yeah, actually, so end of August, GN was at 45.23. So there was only a day and a half where we were above like the monthly gamma neutral, right? And obviously that led to de-risking over the next few days. But yeah, this was gamma neutral was like right here. Right? And then the second upside test failed to break gamma neutral. And then again in August we failed to break DN. Gamma neutral was like fucking up here, right? And so now we've got our first, like this is the first time in the last 3 months that short vol has had a decent window to exit. Right? Because now we have gamma neutral down in like the 43.60 range. We're trading it around like 44.15, 20, right? And then with that arbitrage there, if someone moves in to collapse vol and realized vol, they're going to lose that window really, really fast. So it's better that they're the ones to do it, right?
Yeah.
Yeah, I just don't know, like, in terms of ups, like I agree, this is a great spot for them to just kind of like chill out and float on top of, the market makers and other flows while they de-risk without getting, too much vol, to destroy them. But I mean, in terms of more up, like there's still more room, right? But they're going to have to really, every dollar is going to have to go.
Well, that's why I think they don't push for the up. Maybe I didn't make that clear. Yeah, I don't think.
Well, yeah, I'm just.
I don't think short vol is very.
Idea.
Yeah, I don't think short vol is very interested in up.
Yeah, Amazon, Gamma Max is 150-ish, but it's been pretty volatile, so we're pretty close to Gamma Max on Amazon. Apple's got room, but it's still very high. It doesn't go to Gamma Max like some of the other ones do. Its Gamma Max is at 207.
Microsoft's really close.
Microsoft is basically there. It's like 373. Yeah. Google's also a weird one. But no, it's been so Google has some room, maybe like $10. So the market could go up maybe another 1% or 2%, but it just seems like a lot of work for that last few percent.
Well, you made an interesting chart showing how much of the market's price improvement was directly related to delta in the derivatives market, and I think like the approach of Gamma Max on so much of the Mag 7 really kind of highlights how, like, because beyond that point, buying options is no longer really going to improve the price. There's some like second and third order Greeks that could continue to drive prices higher than Gamma Max, but
you start losing a lot of amplification of your position.
Yeah, it becomes
all the amplification that's pushed us up like just stops. And so if you want to push higher, you've got to chug along and just load up delta, right? Which is
Yeah,
infinitely more
you gotta
expensive.
basically buy the fuck out of the underlying.
And that nobody wants to own that shit.
Yeah, and in fact, they've been doing the opposite.
Yeah, like Nvidia is going. I mean, everything is in the Mag 7's pretty close. I guess QQQ has some room to move, but then again, like the underlyings are a problem, right?
So what's
Yeah.
funny is all this coincides pretty well with the wave of duration reaching maturity in the next little bit here.
Yeah,
Yeah.
as we approach the beginning of 2024.
Yeah.
Yeah, we're probably going to see corporate yields, AAA and BBB move significantly higher, right? Over the next, I would say over the next 6 months, the real surges in yields are probably going to be in corporate bonds.
Ooh,
But
I wanna look at the
that'll
TLT chain.
equivalently pressure UST, right? Jfresh, did you want to cover the like Mag 7% of SPX in the breadth charts?
Oh yeah, I mean it was kind of interesting this last week. We've been sort of fumbling around right near the all-time high concentrations of the meme 7. You know, around 27.4 or 27.6% was the last high that was, you know, achieved, you know, last week, but it's been kind of flat. And that's where we peaked back in like 2021. But this last week, basically on Friday, we were finally able to push up above 28% for the first time ever. So 7 stocks are now 28.1% of the S&P 500.
It's super healthy.
Yeah, so it'll be interesting to see if they can keep pushing that higher. You know, another thing that I've been tracking.
Do you know how much of the Mag 7 is Apple by like percentage?
If you give me a few minutes of awkward silence, I can calculate it.
I don't need to know that much. I guess we could just figure out the amount.
I think it's probably 7 or 8, if I had to guess. If I had to just pick a number out of my ass.
That's it?
Yeah. Apple and Microsoft, I think, are like 7 and 6-ish.
Of the total S&P, right?
Yeah.
Yeah. Okay. I meant of the Mag 7.
Oh, yeah. I mean, that'll be. Let me pull that up because I mean that. Oh, wrong one. That will be important because I think Apple is a weak link for sure.
Yeah,
I mean, obviously, it's definitely the biggest outlier in terms of performance and market cap.
Not only that, they've been really brutally honest on their earnings calls about their forward projections, and their forward projections are not good relative to their current valuation, right? Like Apple's up how much in the last fucking 2 weeks, and like all of their forward projections have been negative.
Yeah, I don't understand that. I think that is
Apple's up almost 13% in the last 9 trading days.
Right,
which is that's a huge amount of market cap.
What are you talking about, Girk? That's only 300 billion.
I think it's more than that.
320 billion. 13%.
Yeah, I mean the meme 7 went up like over the entirety of what the Federal Reserve has tightened over the last year and a half or whatever last year.
It's a little over 400 billion
in 1 week.
Yeah. In 2 weeks. It's disgusting.
Yeah, it's a clown market, man.
I'd be really interested in knowing what percentage of the Mag, because I think if anything collapses it might be Apple or Nvidia shitting the bed on earnings.
See, you know, I mean, are they? Here's the question. I guess that's a question for next week. But are they going to shit the bed?
I don't know,
I think
man.
for
That's,
Nvidia, it's going to be about guidance. But then again, they're happy to just lie.
yeah, but even if you're making it up, like, how many more customers can you create yourself? Like, how many more startups can they fund to flesh out their fucking revenues? Their
I don't know.
unrealized
I mean,
revenues, right? Like,
I
it's just
I've been I've been pretty surprised at how long the money pump in has been able to continue. Right. I mean, given the fact that AI doesn't make any money, and tons of money has gone in, I've been quite surprised at how resilient that's been. I mean, I would imagine more investors would start to be getting upset at this point and looking for return on capital. I mean, at some point, Microsoft is going to have to start charging like a penny per peen or something.
What's funny is Microsoft actually banned their workers from using Chat GPT.
for like 6 hours.
Yeah.
But yeah, they did. They said they cited a security issue. It's because, although I feel like it's just more PR shit. Like, oh my god, the AI might become sentient.
Yeah.
Which is just more bullshit to fuel the fire, right?
Well, at this point,
Let me be
Refresh
really
9 is
clear.
guaranteed.
There's fucking zero risk that Chat GPT takes over the world and does anything. Okay,
Well,
so
so
it's not Skynet. I don't care what you read on Twitter. That's just nonsense. It's just a chat bot.
well, JFresh and I have both pretty much guaranteed that if AI does become sentient, it's going to use its power to flood the universe with dicks.
Yeah, so
Yeah.
we're saving the world. We're trying to.
The first sentient AI will have at least 1,000 dicks all over its body. Anyway, yeah, we've successfully gone off track here. I was actually just looking to see if I have access to Copilot, if I was like one of the lucky people, so I could play around with it. It doesn't look like it.
Can we talk about delinquency rates? Is that fun?
Sure, you got a chart?
Yeah, I mean,
Yeah,
delinquency rates are up.
Yeah,
Nobody
they're
gives a shit.
credit, mostly on credit and auto, though, not yet on mortgages.
Well, so it's up on credit card loans and consumer loans and auto loans.
Yeah, well, I mean, most consumer loans are like debt restructuring and credit, right? So they usually track with like somewhere in between auto and credit cards.
Yeah. So, I mean, the rate of change of it is kind of more so what I've been like kind of watching. So I'm gonna post a chart so
Okay.
you can share with the viewers. It doesn't have everything I want, but that's because I can't remember the keywords to look for auto loans. But these two, I go back to 2008 just because, but this is a year-over-year rate of change.
Okay.
So what's interesting is, consumer loans are still increasing in delinquency rate,
This
and
is this till quarter two? Where's the endpoint?
the endpoint for this guy is on, where's that updated date? Fucking, I hate Fred sometimes.
September 1st.
Looks like it's Q2, yeah.
Okay.
Yeah, it's Q2. So, what's interesting about this is that through Q2, we saw, the rate of increase in consumer loan delinquencies kind of flatten out.
Mhm.
However, we saw an acceleration in the delinquency rate of credit cards.
Yeah.
So something to keep an eye on in terms of future economic impact of tightening credit conditions is that you'll see sort of this is sort of an effect of that bottom up, deterioration of the credit market where people will gladly go delinquent on their credit card before they go delinquent on their mortgage, right?
Well, I thought it was pretty strange that a number of different places have noticed a sizable uptick in the fraction of people who have dipped into their 401ks early, which is no bueno.
No.
Well, it's still a pretty small number though, I'm pretty sure.
Yeah, but it's going up.
It's going
right?
up, but I mean, I'm more, in terms of economic forward indicators, I mean, the best thing to look at is the liquidity of the consumer. That's why I, try to keep track of, delinquency rates and, deposits, those sorts of things. But there's another chart I could have put on this, but it sort of just adds noise for most of it. But the delinquency rates of mortgages, you see heading into the 2008 financial crisis, you see sort of a pattern like I was describing, where you see credit card delinquencies tick up, and then you see mortgages tick up like about 6 months later, right? And that one happened really fast. But I think what we're experiencing now in terms of like any sort of credit bubble deflating is going to be a little more slow this time around. We don't really have. I mean, it could go fast. Like it could start slow and then pick up speed. But at this point, with what we've been seeing, it looks like the credit market's going to have like a slow sort of unwind. But if there is some sort of big sort of event with dollar collateral, then you'll see a bunch of people get laid off just because credit conditions tighten way too much for a lot of companies to be able to maintain their liquidity.
Jay
And so,
Fresh,
What?
question on the pie chart. Sorry, I was just looking at it. Of the buying and the underlying, do you know notionally how much that represents?
Yeah, I have all those numbers somewhere. Oh fuck, I closed it. Shit. Should probably stop cursing so much.
Nah, that's all right.
Shoot, it was like, I'm trying to do too many things at once here on the fly, but it was, I want to say something on the order of like 150. No, like 100 and no, it was like $230 billion notional.
And that's over what time period?
One day.
And that's underlying equity buy?
Yeah. But then like 80% of that at least can be explained by delta on the options chains.
Okay, so we're looking at like 20 billion buy side. Like,
yeah, something like that.
Underlying
like the
flows.
actual well, even that's like I mean, once
So-
you include like momentum trading and all these other things, it's probably less than like 1% of people actually just buying and selling shares in a stock.
so something interesting, and this might feed into what Dork's talking about right now. That's why I kind of cut you off there real quick so you can add this to your thesis. So client net exposure, according to BOFA and GS's prime brokerage reports, is still at 39th percentile, but has increased by the largest amount in the last 2 weeks that it has in the last 2 years. And the majority of that, like 70% of it, is share buybacks. So I'm thinking we have about 5 to 15 billion a week in underlying flows due to buybacks across the S&P.
See, now this is something that I was really confused about, because ever since I started tracking market caps total market caps for all these companies. So when I look at like what fraction of the meme 7 makes up the S&P 500 and what fractions all these things are, I'm looking at total market cap. So I'm not looking at share price or shares. And so I have to basically collect all of the market caps every day for each stock, which obviously, if all of the shares stay constant every day, it's just going to scale with the price, right? As price goes up, market cap goes up by, if price goes up 3%, market cap goes up 3%. But if they're changing the number of shares, then that changes, then the market caps are not changing by the same amount, right?
Yeah.
And so what's interesting though is that I calculate the volatility of market caps versus volatility of price.
Mm-hmm.
And that volatility is much higher than the price volatility. It's like 25 to 30%. Yeah. Versus,
Wow.
14 or 15 or whatever it is on price.
So what if the improvement we're seeing in this like greater weighting of the meme 7 and the action that we've seen in breadth over the last 2 weeks, which has been moderately significant, what if that's more a factor of share buybacks than it is like actual supporting flows?
It very well could be. I mean, quite honestly. And we all know that Apple is a huge. I mean, I think one of the reasons Apple's stock hasn't graded is because they're buying back so much stock.
Yeah.
Which is kind of funny because they talk about like being cash neutral, but they're definitely just replacing. Like they're just taking out more loans. Like they're not actually sitting on a huge pile of cash anymore. They're just selling bonds to buy back stock. It seems stupid. I'm not sure I completely understand it, other than they're just trying to milk the cow.
Well, that's what you do. When you're a huge company, yeah, make the share price go up because all the shareholders, the people who run the company would like to see that.
Yeah. Well, if that's true, I mean, how much longer can this go on, right? I mean, this is what's confusing.
I mean, this is usually like the
this
highest buyback window of the year, right?
But if there's this much buying back, right, with companies that have, I mean, profitability is definitely down.
Revenues are down, margins are contracted.
So you would think that, more and more they're relying on issuing debt to buy back stocks. So they're just replacing public debt with bonds. I don't know.
I mean, a lot of them are still
that,
cash rich, right? Like in the Mag 7, a lot are like Meta, Microsoft, Apple. They're all still pretty cash rich. They issued their last issuances were mostly last year and at nominal rates. The problem I foresee with this is that if they're buying back this heavily going into next year on their earnings, you're going to have the new buyback tax realized, right? It's not a lot, but it's 1%.
Maybe that's what this is, right? They're all trying to front run that.
No, the buyback tax is already in place as of the end end of last year. The other thing is they're going to be pushed to issue more debt, and now in a higher rate environment. And this is making me think that a lot of these companies were hoping that the Fed would have cut by now, right? So they were going to spend
everybody's.
Yeah, but they were going to spend all of 2023 buying back as many shares as they could, leaning on that debt that they issued previously, leaning on those big cash positions, right? Float your stock price through 2023, then issue bonds in 2024 when your cash position isn't as strong, but rates have started to come down again. Except rates aren't going to come down again.
Yeah.
And that's where it gets kind of weird, is like if all of these companies are pushing out that cash position, relying on the issuance of debt next year, they're going to be issuing that debt at a much higher rate, which is going to kind of negate the share buybacks that they did this year, right?
Yeah. So of the to answer your
otherwise they can't maintain their projected growth.
The meme 7, Apple is 25% of it.
Yeah, that's what I thought. It's a big fat chunk, and then Microsoft's close, right?
Like 24%.
Yeah.
So Microsoft might overtake Apple soon. They definitely are better positioned for growth, I think.
I say that. I mean, your put's probably okay because of how overextended it is, but not something. I don't know. Microsoft, Google, Amazon. I'm not even Meta. I'm not huge on shorting them. Like if we have a market crash, obviously they're gonna tank super super hard, right? But outside of that really unlikely situation,
You say that, but actually, the Meme 7 did much better during the COVID crash than everyone
they
else.
perform better, but they still drop a shitload,
No, no,
right?
no. They dropped. Yeah, they still dropped, but they dropped less than the
Yeah,
rest of the
everything
market.
else. That's because people still think they're defensive. Well, that could
Yeah.
change if they start having to issue debt at higher rates, though.
So yeah, so well, really, the thing that that sort of negates the Mag 7 thesis of being a flight to safety is if one of them goes bankrupt.
I mean,
I don't see any of them in that position besides what, maybe Tesla?
Tesla or Meta.
Tesla would be the closest, but Tesla issued so much fucking debt during ZERP, right? Like I don't think they really have to I don't really think they have to worry about their financial situation for a couple more years. Meta's stable. Nvidia I could see being at risk. But
Meta makes money like a champ. I'm going to be honest.
they do. They're really
If
they've always been.
Zuck would stop wasting money on his stupid
That's the
metaverse,
problem, is that Zuck blows all the shareholders' money.
Yeah, I'm just surprised
But
people still really invest in it at this point, like at the level they do. Like it's a great revenue machine, but like I don't necessarily see it like being as valuable as it is. Like it's still priced for like this crazy level of
they
innovation.
all are. They
And
all are, right? They're all priced at like 12x price to sale, or yeah, price to sales, right? Which means they would have to uh, they would have to return all of their revenue for 10 to 12 years to the shareholders, just for the shareholders to break even on their investment, which obviously is not going to happen, right? I mean, they're priced. We're in a bubble, right? We're still in the ZERP bubble, trying to pop it, and it's popping slowly. But if interest rates are going to stay high, these PE and PS ratios are going to come way down, and it's going to be painful.
well, yeah, it's the thing is like apparently the market doesn't just like want like subtle hints like the earnings yield being lower than the 5 year. They need like a kick in the face where like earnings yields are like, not only less than the 5 year, but like less than like 2%. Like what? Like 1%? Like where earnings yields are negative, real earnings yields are like strongly negative. That's what's gonna get people to freak out and go to treasuries.
we're
Because
pretty close to that already. I mean, earnings yields to the 5 and 10 year treasury are already negative.
right, but
Yeah.
we need real earnings yields to be negative, right? And that's because, when you think about people who do,
I mean, we
they
need
invest
Mag
in the index,
7 earnings yields to be negative.
yeah, that would help a lot.
Because the S&P earnings yield is already significantly negative compared to the
Yeah.
current treasury rate.
So here's the issue with the Meme 7, though, is that they have perfect pricing power. At least, well, with the exception of Tesla is getting destroyed on pricing power. But I think that's a testament to the power of the monopoly, right? I mean, if you look at Microsoft's a great example. Their revenue has absolutely skyrocketed since they printed all that fucking money, right?
Yeah.
Uh, it's like basically doubled almost. It's ridiculous. And if you look at like what does Microsoft offer today versus what it offered 3 years ago, it's roughly more or less the same thing, plus or minus, let's call it few percent improvements over. Like there's no dramatic new thing that they're offering.
Well, they are
So
they are
so you're
vertically integrating.
correct. They do have pricing power, but they're still at the mercy of demand, right? And
I completely agree.
if they're putting companies that rely on their services out of business due to their pricing power, they have to pull back that. they have to pull back that profit margin, right? Like they ultimately would be left with no choice. Like if capex comes down and margins broadly contract, the rest of the S&P 500 is their customers, right? So you know, as we get that collapse, and you look at like the real earnings yield from the rest of the S&P compared to the Mag 7, it's not pretty, right? You know, we've kind of talked about how horribly the other 493 stocks are underperforming, and you know, if they overestimate their pricing power, they can lose huge swaths of customers very, very quickly, and that happened after the dot-com bubble, right?
Yeah.
And that was a massive hit to tech, because you know all those monopolies thought they were going to be fine, but ultimately you still need a customer. So
They just buy 'em.
I don't know how much of a moat pricing power really represents, right? Like it's still relative to you know the market's ability to sustain those margins, right?
Yeah, like you kind of saw it in real time when Apple debuted their VR shit.
Yeah.
Like they priced it at $3,000, and the entire audience went, "Oh,
Yeah, well, it's ridiculous, right? Like no one's gonna fucking buy it because it's too much money, and it's, you know, it's sure a few people will, but the vast majority of consumers aren't, and yeah, that's a really good example. I mean, like, you know, in the last recession we saw, like, remember the shitty like iPhone like 4C or whatever, and like
Yeah.
Apple had to start making some like really like much lower end devices, and like when the economy's better, you know, we see them move to the other end of that spectrum.
Pro Max.
Yeah, you get like the Pro Max Ultra 85 camera, you know, and like and so yeah, Apple will have to probably move back to like a cheaper, more competitive model in order to keep up with like and they're already losing out on sales there, and they've been honest about it. They're like, hey, these aren't selling so great, you know, iPhone sales overall are down, iPhone sales over the last 3 years are down, you know, our projections are slimming, and but our market cap's up fucking 13% in 2 weeks.
yeah." Well, I mean, it also goes to show too, you know, the VR glasses. Like the thing is these companies, they do keep an ear to the ground on what their consumers are wanting, but like they're the thing is that is sort of like the Fed keeping an ear to the ground on inflation, right? Like
Yeah.
it's a reaction function, and so we're seeing companies, you know, offering things that are more and more expensive still, when the reality is that consumers currently are looking for deals and they're not getting any anywhere. Like there's no deal to be found. So like there's gonna be some sort of, you know, inflection point where these ultra large companies, like you were saying, right? They have all this pricing power, but they're starting to, you know, be abusive with it, and the end user is just gonna not want it. And you know, it's already happening. We see it with Apple.
That also opens them up to competition, right? So it, you know, not only does the moat end up more shallow, but it kind of loses its breadth as well, because you know, if you're an advertiser and you advertise with Meta, and Meta's charging top dollar, but you can reach an equivalent audience advertising across like, you know, YouTube, Snapchat, and like 3 other platforms, right? As long as you're getting your ads out in front of the same number of people, and you can do that for half the price, why are you going to choose Meta, right?
Yeah, like and
And
the thing is that
that's where it starts to break down, is like newcomers to the market start to get a pricing advantage because they don't have all the infrastructure to support, they don't have the employees to support, right? And they can give those customers that much better rate, and that makes them more competitive. And you know, like if you look at the last recession, that's really when Microsoft kind of slipped below Apple, right, as far as like consumer side purchasing went, and Apple started to take the lead. And like, you know, I don't think Microsoft's ever going to be replaced, right? But on the business, like software as a service side, they could definitely lose. They could lose a lot of their advantage in a drawn out period like that.
They'll just buy their competitors.
Hopefully, right? Unless they've spent all their cash on share buybacks, thinking that
Yeah,
they were the best thing to buy. I mean, think of the fucking hubris there.
like yeah, it's I mean, the thing is about Microsoft is they're getting away with so much vertical integration right now, like between buying Bungie and Activision Blizzard, like, you know, in terms of like the video game space, which is a huge, huge market.
Wait,
Yeah,
didn't they
They
buy Bungie like 20 years ago?
it's
they
been a
bought
while.
Bungie, yeah, a while ago, but they're not stopping. They also just bought Bethesda. Like they're definitely, you know, they're siloing content onto their gaming devices,
There's
right? And
actually a
like I mean,
big problem with that, but I'm not going to get into it. But no, I am. Okay, so the big problem with buying big devs like that is smaller devs can still make games that are popular, right? So it's like
yeah,
a never ending market of trying to buy up prior IP, but you can never get ahead of newer IP coming out.
Yeah.
yeah.
I mean, the bigger firms are going to make, staples that everybody loves, and they'll move volume and all that, but they're not going to be the ones that are really innovating typically. Um, they're
If
like they're
anything,
just making like episodes. They're just crapping out episodes of Friends and
yeah, if anything, they burn those. They do more to burn those products out than they do to, preserve the lifespan of those products.
Yeah, just look at the latest Modern Warfare that just got released. Everyone says it's ass.
Yeah, but there'll be some subset of people that are like, "This is the best game ever." I don't care what you say, right? But that's just video
and
games. But
people will still play it.
every time that the new COD is garbage, the number of people that are like, "This is the best game ever," reduces, right?
Well, those are the only people that the executives listen to.
It's like how many different versions of Skyrim, needed to come out before people were just like, "I don't ever want to play this game again."
It's actually the Elder Scrolls, Gork, and let me tell you, I am so angry that I actually have to consider buying an Xbox to play that fucking game.
Why? They'll release it on your fucking refrigerator in like 3 years.
No, well, yeah, if okay, so if Microsoft buys Sony, then yeah, then I'll get to play it on my PlayStation. But you know, it's they're the thing is that this level of vertical integration like this, like it only serves to harm consumers for picking the wrong brand, right? Of hardware, right?
Yeah.
Which is ridiculous. And the fact that the SEC, you know, is totally chill with this, or the FTC or whoever oversees these
FTC.
fucking buyouts. Yeah, it's just ridiculous that they don't see this as vertical integration.
I mean, it's pretty obvious that it's just corrupt at this point and we need to break up monopolies, but no one fucking cares. Everyone's more worried about fighting about social welfare programs.
Right, right. Yeah, social welfare programs and how much money to send to other countries.
Yeah.
What
That
the
will
hell?
never
Can we talk
happen.
about
Shill.
Can we talk about, since we're talking about company health, talk a little bit about earnings and earnings predictions going forward? Like, there's some interesting things here.
They've been trimmed pretty heavily over this earnings period.
Well, yeah. So here's sort of the lay of the land that I see. Most of the SP 500, like 90 something percent, have reported for Q3, and earnings growth has been quite surprising to the upside. People were expecting basically flat going into earnings, and now it's something like 4% year over year, something like that. And historically, it's done quite well. But the interesting thing is the revenues have been much more lackluster. So revenue growth was only like 2.3%, and the number of people that surprised to the upside was only 61%, which is like worse than the 10-year average. So very low revenues, very high earnings, which implies that they're raising prices, right?
Yeah.
So a lot of what's going on in earnings, or the earnings power that companies have seen, has just been price gouging to some extent, which obviously I think is reflected in the GDP numbers and the productivity numbers, right? I think they're over ascribing productivity to prices.
If you read Pickle's picks ever,
I do not. It's some of the worst literature I've ever seen.
you
I just
son of a bitch. If you've read it 4 weeks ago, I went over the comparison of Q3 earnings and net sales to gross margins, and we wouldn't be having this conversation
if I read it. But I
Yeah.
mean, can you actually expect me to get through all that garbage?
Yeah. You're supposed to stay informed, motherfucker. All right.
I'm informing myself on my own pace.
This is why your
right?
weekly predictions are wrong so often.
But here's where I'm getting at. What I find, remember, we've been laughing at these predictions that by Q4 and beyond, we'll have, earnings growth 12% year over year.
Yeah.
Those are starting to get pulled back, which I find very interesting, but they're still elevated, right? I mean, so next
extremely.
quarter, it's not 12 anymore. It's like,
well, earnings projections are still counting on the Fed cutting rates early next year.
Yeah, what I find more interesting is that all of them are predicting 4% revenue growth year over year, pretty much all the way through 2025. And so that's basically requiring a lot of things to go right? I mean, a lot of productivity gains.
Where are we going to find the workers?
Yeah, employees not demanding higher wages for their labor in a high labor demand environment.
Well, hold on. It's employees demanding higher wages and then them being unable to price forward those wages into their margins, right? So
yeah,
that's a whole nother thing that'll be interesting. At some point that's going to break too. They're going to have to pull back their profitability in order to meet labor demands, but
it's already happening, right here and there. It's
more
process,
in manufacturing right now, which we see with the strikes, like with the auto workers union and stuff. But it's still
also
much
shipping. UPS,
like right now, tech
healthcare.
is like, oh, we're doing, like, most tech employees are like, I'm doing great. I'm totally gonna buy that extra $800,000 house with a 8% mortgage.
Which is funny because tech's had the most layoffs.
Yeah.
But I think that's interesting to see that. I mean, obviously, these 12% growth estimates are overly ambitious, and this goes back to what Dork was saying about like how much lower earnings are going to have to be, earnings returns relative to the rate of bonds. I mean, they have to maintain this fairy tale to maintain any semblance of a normal, well-functioning market in equities. But as that crumbles, I mean, obviously they're very good at moving the goalposts and continuing to just try to pump everything. But I mean, I definitely feel like as time goes on, the bear thesis is winning. But
I mean,
we'll see.
We're still winning, right? We're still like 5% down from the yearly high.
Yeah, I guess it's a win.
Sort of.
So it's something like 56% of companies in the S&P are negative on the year.
Yeah,
that's fun.
That's increasing, but the GDP nowcast doubled in 1 week. So I wonder if all that GDP is just coming from Yellen paying the debt every month.
Yeah, I mean, I think that's pretty obvious from just a macro perspective.
Yeah, it's getting there. It's you talked about this really early in the year, and I was like,
yeah,
oh, we're not there yet, right? But we're getting there. We're getting there very quickly, right? Especially with these auctions printing fat tails like over and over and over again on duration. We're seeing less and less demand from the market, right? And in order to continue funding the government, Yellen's just gonna have to she's gonna have to pay up, right? And JPow's just not doing anything, which is probably infuriating as all hell for her.
Well, I mean, JPow's probably pissed off too. She's raiding his RRP fund. I think we already talked about this, but holy cow, man,
Yeah,
that's not cool.
RRP's down
She
hard.
lowered her duration, the mix of duration, so that she could lean on that RRP fund that he so meticulously built so that he could pin rates. Right? I mean, once that goes away, then the Fed loses control, right? So
Well, they still have the bank reserves on deposit, which is like another 3.6 trillion, but it's a big problem because Yellen's not issuing less next quarter, right? So like, everyone was like, oh my god, Yellen's projection was so much less this quarter for like the rest of this quarter, right? And then last quarter, the midterm update, she ended up exceeding issuance into the end of it anyway, because it's just like a guideline. It's not really like this is exactly what we're issuing, and it's determined on an auction by auction basis. But next quarter, she raised the issuance by like 116 billion. So next quarter didn't get trimmed at all, and everyone's focused on this quarter, and yields are contracting, and everyone's super bullish about her issuing less debt into the end of this year. But from Jan to fucking March, she's gonna issue another, like another $1 trillion, right? I mean, it's still like if you look at both periods combined, it's 1.6 trillion estimated, and it'll probably end up being closer to like 1.7 or 1.8.
And this is timely. We'll see. Does anybody in the audience know who our current Speaker of the House is? Because we have one. Someone. I'm not watching the stream, but someone.
I read his name once.
Don't cheat.
They're all cheating. I don't know either.
John Mikeson.
Okay.
His name's Mike Johnson. His name's Mike Johnson.
Mike Johnson.
Mike Johnson?
I don't know. Mike Johnson.
Pigeon Teeth said he's spoken inside a house.
It looks like they are putting up stopgaps because they have till basically Friday to do something with the budget, and it looks like there are zero of any cuts that have been demanded by any conservative in Congress. So it's still spending at full clip, which is no bueno, right? So, I mean, I think Yellen's probably I think she's underestimated how much she's likely going to have to issue in Q4, especially because she's pivoting to lower duration to begin with. So it'll be interesting to see. I think she's trying to buy time too, but she's taking on a lot of risk.
Well, so this kind of comes back to we had this discussion the last time we were, reaching an impending government shutdown. Like as interest rates go up, right, and as deficits continue to increase, without any sort of real spending cuts to, stuff that we could probably afford to cut, we're going to see these sort of looming shutdowns show up more and more frequently, right? And that's kind of what we're looking at, So
I mean, that's why Moody's is warning over and over again, right? And that's why Fitch downgraded earlier. Is that this situation is not going to improve anytime soon without significant interaction from the voters.
Or some sort of intervention by the legislature, but we all know how fucking laughable that is.
Yeah.
I mean, hey, they're just trying to be a barely functioning body. They have their hands full just operating, right? Let's not push them too much, right? I mean, that's why you can kind of see like they don't have time to make any meaningful, thoughtful, rational changes to the budget long term. They have 7 days, right? They're just gonna push this crap through, and
they're just gonna extend it again. Is what they're gonna do.
Well, yeah,
but if they do that, we might actually get a downgrade, right?
Yeah,
that'd be a fucking epic OPEX. We have all that interest, and then Moody's moves us down to AAA over the weekend. Woo boy, 3,800 fast.
Well, like, I mean, that's the
Yeah.
thing is like you can't like as a macroeconomist, like I feel like I feel like I'm being lied to whenever I hear about economists being so bullish on things.
Anytime you
When-
listen to an economist, you're being lied to.
Yeah, but like even the armchair economists on Reddit aren't even speaking out against this idea that our economy is going to grow at this ridiculous clip forever, right? Like we have this idea ingrained in our heads that, our nation, because it is the biggest, right, monetarily, we can just grow forever and increase our deficits infinitely and get away with it. Like eventually what like the end game of that is that eventually, I mean, we talk about everybody's dependent on the dollar, but if we hyperinflate every other nation, they're going to stop using the dollar.
Well, think about this. This is
Yeah,
something to
I mean,
consider.
maybe. I know
No,
you're all
for sure.
about the dollar's prominence going away, but where else are you gonna go right now?
Nowhere. There's nowhere else to go.
Oil.
Bitcoin?
Oil.
Oh God.
I'm kidding. But Dork, over
Bitcoin's
like the
doing
last month, right, and like the Fed's guidance and Yellen's issuance and like growth metrics, right, and our GDP now, we look like we're just in stagflation, right? But the problem with being in stagflation is a break in either direction. Like either we move into deflation, which I think would require significantly stronger action from the Fed, or the economy is going to start overheating, right? And by like quarter two, and this is where I get concerned about the growth projections, is they're really projecting like an overheating economy, right? And you're looking at something more along the lines of production, or well, you're looking at something along the lines of growth outpacing the means of production, right?
Well, I mean, you think a GDP print of 5% isn't already a fucking overheating economy? Jesus.
I mean, I do, but it's
understand
one
why you
print,
won't just
right?
admit that Peruvian bull was right all along.
No, he's a dipshit.
One
Also,
day.
none of these were his predictions. If you actually go and read the pile of garbage that he wrote, he really just predicted every possible negative outcome, and he was like, all of this is going to happen.
And hyperinflation,
yeah, but he also thinks all that money's going into crypto, which is laughable.
I mean, crypto's gone up what, 100 and something percent this year?
Yeah, from its low.
Yeah.
But, who's been right all along?
What's up?
Who's been right all along?
Who? Schiff?
Well, no, not Schiff. He's my spirit animal, but he's wrong.
Tom Lee?
2022, Nouriel Rubini was right all along.
Ooh.
Okay.
People like to shit on him, but he's...
I like him.
I do too.
He bitched out in 2023.
Yeah, he did.
Because
he did?
Yeah.
Well, yeah, because the pain trade, like he obviously doesn't trade it, but like his prediction took longer to materialize, and so he fell victim to the human condition of assuming that he was wrong.
So
the same thing that Mike Wilson did with the oil cycle.
What you're saying is I'm benefiting from being a permabull or permabear by just being bearish all the time.
Well, it's a great time to be bearish right now. I hate it, but it's a great time to be bearish right now. I mean, like, nothing's getting better.
Yeah, I was really hoping that we wouldn't have to be bears for a lot longer.
I know, I'm pissed.
I know. I feel like.
But
all right, we're gonna do this for another quarter and see if this.
I did get to buy calls over the last 2 weeks, so I got a little bit of the bullishness out of my system.
There you go.
All right, let's talk about SPX going into next week, because otherwise we're gonna sit here trying to determine the financial apocalypse.
We didn't even talk about CPI this week.
We do have CPI this week. It's probably going to be flat though.
Yeah.
Like October is like the high and the low for oil. So yeah, I think CPI is what might be interesting on this CPI print is core may be up. right? We've had enough time since the big surge in oil for that to kind of filter through producer side, and we've seen some effect on PPI core. So I think CPI core either this month or next month we'll see a little bit of a bump. Hopefully this month because core will scare the Fed. um, maybe into some
So all I'm
action.
gonna say is healthcare.
Yeah, healthcare is not being really weighted that heavily, but the cost of healthcare is increasing rapidly. It does become weighted more heavily seasonally into the beginning of next year, though, right?
They've changed the way that they calculate healthcare in the CPI, and I mean this is another challenge of the CPI is they're always like changing the methodology to what they think is best at the time, which sort of induces bias into it that makes it hard to use it as a a trail a long-term indicator. But they changed it, was it 1 year ago, to um, to be done the price of healthcare, and the argument was the rates that people pay for their healthcare plan, which largely drives the cost of the healthcare, is set once a year.
Mm-hmm.
And so they are basically setting the rate yearly instead of monthly. And so that gets reset in this print for this year. And obviously it should go up, right? And it should go up quite dramatically. So I don't know what it's going to do to the data, but it could make it a little hot for that reason.
Yeah, that
Depends on
could.
what
That
what
I don't
that
know if it'll weigh.
adjustment is.
I don't know if it'll outweigh oil. But I mean, if you think about like, I think something that we don't. One of the reasons we see so much higher consumer side inflation than what we're getting reported from the Fed is like, because of that change to how they measure CPI and how CPI changes over time. Like if we still measured like CPI the way we did back in like the 70s, right? Where you have like the market basket that's weighted and then you collect the survey of prices over time and then aggregate it with the index and various individual items, right? With the concurrent base period updates, like our inflation would be about 12, like 11 to 12%. It's about 4 times higher, right? And the Fed's response to that, I don't think is severe enough. And I really wonder if the Fed is taking that into consideration with their current, estimate of, being near a strong neutral rate. I don't think they are.
I mean, Jay Powell said in his last discussion that he does not feel confident that they are in a restrictive environment. They don't know, right?
Yeah, I mean, because I did like, well, I just did it for like 1 month, but like if you use the prior CPI calculation, um, you get a month over month of like 1.6%, and if you use the current one, you get like 0.02 or 0.2,
It's the
which is
primary difference.
that's right. But the inflation they measured in the 70s, that's the inflation we're all feeling, right? Like the way
Yeah.
they measured inflation in the 70s was much more, it was much more focused on like what consumers are paying out of pocket versus, like the way they seasonally weight and adjust things now. And like our out of pocket expenses as consumers are just rocketing with no end in sight, and it was much better at determining like profiteering on the corporate side. So and look at Volcker's response back then, and it was barely enough, right? Like he was even ready at the time to raise higher. Fortunately, he didn't need to, but he was ready to. I don't think JPow's ready to, and I don't
No,
think
JPow's definitely
I
a
don't think
cut.
our current measure of inflation is reflective of the conditions driving inflation, and I think we're really at like we're above 10% inflation, which and that even though no one's talking about it, that actually explains why our GDP forecasts are so high.
So I have a homework assignment for all the billionaires listening.
They're not going to do it
I know.
unless
Are you
it's
gonna have them?
masturbate.
Are you gonna have them calculate the last 3 years of CPI? With the
No,
old...
well, no, not like that. But what they can do is you got a grocery bill, right? Itemize it in an Excel chart and check out the inflation on all your stuff. Like every
How are
month,
they going to
just
do
kind of
that?
go through it and look at how your
Forward
price
looking.
change.
Yeah, that's a lot of work.
we
Nobody
could
wants to
create
do
our
that.
we could create our own CPI index.
Well,
I mean, don't they? What
If
is that?
everyone
Like
if everyone
trueflation?
if everyone wants to collate their receipts and build us a database.
Well, I did this. I just did this once just for fun.
Yeah, but you're a nerd.
But it was February 2020 into March 2020, and I realized my grocery prices inflated by over 100% for everything.
Yep.
So that's it's that was just one snapshot that I did, and then I had to deal with the pandemic. But like the it's a fun little experiment you can do, and you could actually compare your price changes in your groceries and in your like paper towels and shit to the actual numbers that get released. So it's a fun little thing, and I would especially if you spend a lot of money on groceries, it's going to be hard to do, but it'll give you a lot of important data for yourself, because like the CPI doesn't tell you what you're spending.
It's not a fun experiment, it's reality.
Yeah, exactly. But you're quantifying.
Washington Beef says payday loans are at 777%. I don't need to look at my groceries in an Excel sheet. You need to stop trying to beat the market with payday loans, Washington Beef.
Jesus. All right, well, we want to do weekly predictions for this big week of data?
Yeah, let's do it.
Yeah,
All right, want me to go first?
sure.
All right. Consumer inflation expectations up, market down 45 basis points on Monday. And then all the other prints suck, and the market just continues down. So you pretty much just draw a line from our current price, because we might gap up a little bit, but our current price
Just
down
a little gap up. Yeah.
A little gap up, but then
The usual.
Yeah, but then so a line from basically our current price down to let's just call it 4,200.
I hate that this is your prediction.
Why?
I just do.
It's just
Probably
it's
'cause it's his.
easy for you to draw, though. I mean, come on. I was bullish last week. I get to be bearish again. Okay.
He's mad because that's his prediction.
No, I'm not. That's not my prediction at all. But I'm mad because I feel like it's arbitrary.
It's fairly arbitrary because I'm not trying to predict the intra-week price. I'm just trying to get the closing price of the week down. That's all.
I know.
Because everything that happens in between is just noise, right? With all this data that's coming out. So
there's there's your pink line. Oh wait, that's the wrong color. Pink. There we go.
Yeah, that's all I'm trying to try to do this week. I don't want to get into the weeds on testing the delta neutrals and stuff. We'll probably if we do end up going down, we're probably gonna test GN and stagnate at it for a little bit. But with each data print, if they all suck, then like they all point to higher for longer, like even longer, or so consumer inflation expectations continuing to go up is probably the worst indicator of them all. So if that happens, then you know, it kind of doesn't really matter what happens after that. They're probably all going to come in either flat or up, in my opinion. And you know, besides maybe headline, and then you know that's just going to make the market real sad. So that's what I'm calling it. Plus, I'm a bear, so I just have to say all the data is going to print negative too. It's kind of my thing.
All right. JFresh.
Monday. So people I think are a little spooked by Moody's, but not that bad because who gives a shit? Nothing matters anymore. There's already some momentum upwards. There's some emboldenedness. So I'm going to say on Monday, we're going to, I don't know where we're going to open, but I say we're going to close around 44.30.
Okay, where's your? Give me an open though.
Whatever the close was.
All right. So
They'll recover the
Monday,
Moody's drop overnight tonight.
44.30 close. All right.
Yeah. Then Tuesday, what time does CPI come out?
In the morning.
Beforehand. Tuesday, we're going to open at 4,400. And we'll go down to 43.80. Then, is there anything else I'm missing? I mean, there's PPI, but people don't care about that. Philly. Ooh, there's a 20. Oh, that 20 years next week. There's no bond. There's no important bonds auctions next week, is there? Sorry, I don't mean to be taking so much time.
Maybe.
I don't see anything.
5.
Where's the 5?
I
see the 20. There's a 20-year on Monday, next Monday,
and
then a 10-year tips. So yeah, so with nothing else, then I think maybe we'll go down the next day after that to 43.50. But then everyone gets excited about Nvidia earnings next week, and we go back to 4,400 to close the week.
all right. Does that look good?
Hold on, let me look. Yeah, sure. That looks fine.
So I think we are likely to recover in the pre-market from the Moody's drop. I think we open maybe around like 44. Let's say 44.20. I think we go up into the end of the day. $50. I agree that we open lower. But I think 4,400 Tuesday. And Wednesday. Tuesday, Wednesday. I think we can move back to like 25. Thursday. Actually, like midday Thursday. I think we can hold 25. Then midday Thursday, we start to drop 80. There.
That midday Thursday kind of threw me a little bit. What's that about?
Charm.
Hmm.
There's a lot of
Why,
charm on that
why down?
November
Why down on Friday?
AM expiry. After the AM expiry falls off.
Hmm.
Yeah, now you
Good
now you
call.
now you want now you want the end of the week to go down, don't you?
I don't know. I didn't really factor in OPEX at all, which is funny because I'm like the options obsessed person. I was thinking about other data.
No. Oh.
Yeah, I mean, I think that's about right. I mean, obviously, Dork just hopefully is the correct one, but
That'd be cool. Yeah, I mean, I have some longer dated puts, but I'm still looking to accumulate. I still think we could see IV, like out the money IV at like, I don't know, sub 14 in the early part of this week. So I've been waiting on picking up like more March AM expiry for Vega exposure. I didn't. So my biggest problem this quarter is that I didn't get out of the like the bottom of the correction as well as I would have liked to. But I still closed like a lot of my puts on the way up. I mean, obviously they could have been way more profitable had we not bounced so hard. But I did get out of all of them while they were still profitable, and I definitely approaching like another uncertain downside move like that would very much like to have that kind of positioning, you know, where I've got, you know, 20, 30 days of theta and I'm not super, like, I'm in the money after the drop is realized, because it makes it so much easier to manage than when you're playing, you know, like when you're playing like that bottom line PT and you're trying to like bottom tick the market in order to collect your profits. Because like I was closing puts for like 2 days on 2.5 days on the bounce, and everything I closed profitably, right? So I feel like that's a much better situation to be in, where you can really get a feel for the kind of like bear rally, right? And you can determine, you know, if you want to close or if you want to stay in, and it gives you a little bit more flexibility. And I like that a lot. I like that like 90-day window or so on the Vega positioning. Not only does Vega tick up super fast when vol rises, but it gives you a lot more time to get out of the position than if you have like 30 or 45 days, right?
yeah.
Yeah, I've been pretty happy with that. But I'm gonna pick up some more March AM this week. I picked up a little bit last week, so I'm not just, you know, naked. But what I really want to do this week is I want to get some calls sold near our tops, like 1421 DTE calls, because I think we're bound to have at least a small correction, and I think selling here is the right choice versus just going long puts.
Yeah.
So
I want to add to my prediction for next week. We're crashing on Tuesday.
yeah, I was gonna I was gonna do that too, but sure, I'll give it to you. So you want to go
Little downies,
here and then how?
just enough to buy the dip, for people to buy the dip, and then 4,000.
Okay.
Nice.
All right, I'm gonna lock you into that next week, just so you know.
Yeah, that's fine.
Not that you care, but wait, where is it? Tuesday, Wednesday,
Where the
9:30.
points are made up and
All right, there.
nothing matters. What's it? Whose line is it anyway?
There you
Everything's made up and the points don't matter.
go. I agree, but I think like 4,100 in that time period. I don't think we'll get to 40, 50 that quick, but we could. I think the post OPEX period is going to be pretty bearish, but it also is going to probably hinge on Nvidia, right? Is Nvidia's earnings that Tuesday? Oh, it is.
I think
Okay,
so.
so that's what
Yeah.
we're back. Yeah.
I
All
guess
right.
maybe I should have done Wednesday, but yeah, I'm just gonna go with Tuesday. If I'm off by a day, whatever.
All right. Well,
Cool.
thank you guys for tuning in. I appreciate it. Good talk.
Thanks for having us.
Of
Yeah.
course. Yeah. I'll see you guys later.
That's it.
Yeah, happy Sunday, guys.
For everyone else, if you had any questions and you didn't get to ask me on the stream, I should be around for the rest of the day. I got a bunch of research to do for the market this week. Would you say more bips or fewer bips next week? Probably still a lot of like realized vol control, right? So I think at least in the early part of the week, our moves are gonna still be muted as they try to. I think they're gonna continue to try to crush implied like realized volatility, right? So even if we do move to the upside and squeeze out some of those longer dated sold calls, I think they're just going to be met with even more longer dated sold calls, and we're going to see continued put selling at least into Wednesday. So I'm mostly bullish on the first half of the week. If CPI's cool, like I could see us kind of just doing like this instead. This is kind of assuming that CPI is gonna be a little hotter or neutral. But if CPI is a little cooler, I could see us holding that upper range a little longer. And then maybe like failing to like 50 instead of like 43.50 instead of like 43.20, right? So just a slightly higher range on a cooler CPI. But I don't think CPI is going to be cooler. I think it's going to be pretty flat. Last time you were this bearish, the market rocketed. I don't really think my projection's all that bearish. But okay. I mean, I got us testing like 44.50 tomorrow. So that's a pretty bullish start, right? Anyway, thank you guys so much for tuning in. Like I said, if you have any questions, hit me up. I'll be around. I'll have Pickles picks out tonight. Probably around midnight. Might be a little bit later though. I do kind of want to see how futures are going to react to the Moody's news, because like our projection for open at 4400 that me, Dork, and JFresh all had could be very, very wrong if the Moody's shit has a more significant impact. Like if we were to lose gamma neutral, which I believe is a little bit higher now, before market open, we could have a really like bearish start to the week. Maybe even like down to DN before maybe bouncing up into like Wednesday, Thursday, right? So keep that in mind. I mean, obviously, these projections are just an estimate of what we think could happen, and are not really grounded in the day-to-day data. So the day-to-day assumptions are much better. Thanks, buckled up, Jen. All right, guys, I'll see you around. Everybody, enjoy the rest of your weekend. Later. Oh, drop a like before you leave if you could. Thank you.